Done. Start in a minute. Okay, you can start now.
Hello, everyone. Good evening. Thank you for joining us today on this session of Market Movements. Uh, Last week, we have all seen a very stressful time as we saw a lot of events that happened across the border and with our neighboring country, Pakistan. And it was tough times, but I think overall we have navigated well as a result out of it. And last 2 3 days have been really good for the markets. We have seen some good recovery in the markets. So we wanted to do this session and wanted to discuss with you all on what we think about the markets and how do we navigate the markets. So uh, in this session, we would want to cover across macro events, what all macro events have happened, and go into deep into them. We would also cover some of the macro factors, as well as then we will go deep into what is our strategy in terms of our allocations into the small cases as well as PMS. So, if you look at the overall situation, definitely it was tough. But if you look at the war, I think it's a commercial world these days, and the wars are not uh, like fought for very long period, and these are mostly uh, influenced by commerce. So as we entered, as we have seen that as we entered into the war, a lot of like people, a lot of countries like China, US uh, came into it and were deeply involved in the overall conversations and were influencing. Uh, but it is mostly commerce, right? So India has uh, in this war, India has proven a significant influence over the region. If you look at uh, how we used to fight the war, it was pretty passive. We used to react, but we never used to be proactive uh, uh, in terms of dismantling the enemy infrastructure. So we have not only dismantled their terrorist infrastructure, we have also impacted their infrastructure of defense systems, and that has shown India's strength as a nation which takes a response, which gives a response, as well as a nation which is strong in defense. So as a result, we have also seen the defense sector doing pretty well over the last few days. So overall, if you look at this war, this improves India's significance and dominance in the region as well as across the globe. As we all know that India's air force has become third most powerful air force post this war, and our rating, I must say, have improved over there. So what this overall thing is doing, that a lot of countries which were buying equipments or defense equipments from, say, countries like China, uh, are going to shift to India. See, we overall, India procures around 6.8 lakh crores of defense equipments from the rest of the world, and from the world, and out of this, only around 25% is procured domestically, right? So not only we want to make it more indigenous in terms of our defense procurement, but we also want to increase our exports to the rest of the world. We have already increased our exports of defense to the tune of 25,000 crores already, and now we want to further increase it. And the possibilities of this increase post the war, as most of our systems, uh, be it BrahMos and other missile systems and radars, etc., are seeing good traction and good inquiries coming in from the globe in terms of export opportunities. So this as a sector, this sector should do pretty well from here, and that's what we are seeing in terms of the stock prices and the stock movements over the last few days, right? So this war has created India's strong stance in terms of its standing in the world, that it is standing against the terrorism. It takes it reduces Pakistan's overall strength as many of their defense system has been destroyed. It reduces their strength, and it creates business opportunities as well, right? As we could see some business of defense getting diverged to India, right? So this war is has turned up, if you look at the war in hindsight, this has turned up pretty well for us. uh, will the war escalate? We believe that it should not escalate from here. The ceasefire should hold, although you cannot like say this with 100% accuracy, but as of now, looking at what has happened to Pakistan, what infrastructure they have, what stance we have, how we have taken this up diplomatically, we do not see that this war should escalate further. And even if you look at the FII's number, so FII number day before were pretty robust. Yesterday there was a good selling. Today I think there is a good buying. We're yet to see the numbers, but there's a good buying coming in from the FIIs. So we believe that this overall war should not escalate further. But yes, if there is anything, we would give a befitting reply to it, and that's what we have already said. Uh, what changed this scenario was one single cabinet note that came from the Indian government, which said that any act of terrorism would be construed as act of war. I think that was a very strong statement that India gave, and that actually sets it up, sets the tone of how India is going to react to such kind of situations going forward, right? If you look at markets uh, in this time of war, a lot of positive things have also happened. So if you look at India, UK, there has been a bilateral trade agreement between India and UK, and that was pending since the last three and a half years, and this has been a very long discussion, and that has concluded. And this is a very positive thing for our economy. I think we should take this up very positively, as this opens up a lot of export opportunities for Indian companies. So this is an era where there are one-to-one trade agreements that are going to happen, right? So a lot of things are changing in this world. Overall, these last 5 years, 10 years have been uh, pretty engaging in terms of a lot of developments happening. We have seen COVID, we have seen surgical strikes, we have seen now trade war. So a lot of things are happening in this world. So with the trade war, the deglobalization is happening, or realignment of globalization is happening in terms of the world now going to transact one to one with various economies, right? So and that's where we are seeing some good opportunities where we could, since our diplomatic relations are very good, we can take not only like reduce our imports, but also take business from the rest of the world. In terms of our manufacturing, we have already seen our manufacturing being pushed by the government, and infrastructure being laid out over the last few years in terms of PLI scheme, setting up infrastructure, etc., etc., and that has been very positive for our overall setup, showcasing us as a alternative, or as an emerging alternative for manufacturing for the rest of the world. So that thing, keeping in mind. We are seeing that there are opportunities emerging out of the trade relationships that we, or the diplomatic relationships that we have. So India UK FTA, UK bilateral trade agreement has happened, and that is very positive for the economy. I think a lot of sectors are going to benefit, be it textile, be it automobile, be it a lot of other sectors, chemicals, pharma, etc., etc., right? So this gives us opportunity and gives a diversification, and reduces the reliance on, or the pressure of signing a bilateral trade agreement with US, right? So this is again a very positive thing that has happened. Yeah, if you look at China US, there has been some stoppage of the escalation of trade war, and they have scaled back on some of the tariffs, and then taken a 90 days window to take things forward. Although we believe that India has been pretty closely working with the US and shares a better relation with the US and has lower and the kind of fiscal the kind of deficit that US and China has, India comparatively has a very low deficit. So with the US, so we believe that India's chances of signing an FTA or a bilateral trade agreement with the US are higher than China and US. Yes, they are definitely they have tried to sit back on the table and try to sign the bilateral trade agreement, but we believe that even if you look at Piyush Goyal, he's traveling to US next week, and we believe that this is going to be like whenever this signs, this is going to be a very big news for the market, and market always uh, discounts the future, right? So whenever there are signs of this trade agreement happening, we should see a good rally in the markets, right? So India having good relations with the rest of the world, we believe that one to one trade setups or trade agreements are going to happen with the rest of the world, which would be faster than that of China, as a lot of countries would want to move out of China or would want to diversify from China, considering the kind of like deficits China used to create, the kind of policies China has. So India, being a neutral country and now a very stronger country, would attract a lot of FDI and foreign capital as well. As we are seeing that another very good thing that has happened over the markets is that if you look at the macro factors, right, you look at the dollar index that has fallen significantly, and that is loved by the markets. If you look at the interest rates have fallen in India, interest rates have fallen in US, and there is a huge pressure on Fed to further reduce the interest rates. And I think further reduction of interest rates would be loved by the markets. If you look at the inflation have been in control, and retail inflation has fallen significantly, and I think that is again a very positive thing for Indian markets. If you look at crude is $63. Again, amazing for the markets, for Indian economy, as we are import dependent on crude. If you look at a lot of sectors where we were importing big time, like the mobile phones or electronics, we've been trying to manufacture ourselves, and there we have made good inroads in terms of not only manufacturing for ourselves and also exporting for the rest of the world. That is again very positive. If you look at other factors, like you look at GST collection, GST collection has reached 2.4 lakh crores around, and again very positive. India's PMI is Purchase Managers Index, grow like is the highest amongst the developing economies, and that's again very positive. If you look at the US dollar, that has corrected versus the rupee has appreciated, and there a stronger rupee is again good. Um, right, we are going to see, as the interest rates falls, we are going to see money coming in from the FIIs in terms of allocation into equities and allocation coming into emerging markets, and India would be the biggest beneficiary, considering a very high weightage on the MSCI index. So if you look at overall situation, every macroeconomic parameter, most of the macroeconomic parameters are looking very fairly positive at this point in time, and that they are sensing a bullish trend going forward, right? So we believe that the war has been in a way put to rest. The overall noise around Pakistan and other geopolitical issues have been put to rest. Other geopolitical things across the globe are not impacting India and are going at their own pace, and has been already been discounted by the markets. The tariff issues, which started post Trump coming in, have escalated and been mostly priced in, and now there are de-escalation of those trade war. That is again a positive for the markets, right? If you look at the results, so the results have been coming coming in, and we have seen the results, and it is a mixed bag, right? So some of the results have not been that great, but many of the results have been good and on the positive side. Especially if you look at the commentaries coming in from the management, they've been good and positive side. Definitely, Q1 could be impacted in terms of tariff war that has happened, and some of the uh, business which was already in transit or in pipeline being impacted because of the tariff. This could impact some of the P&L of some export oriented companies for sure. But if you look at this from a longer term perspective, this is the kind of trade agreements, long term trade agreements we are going to do. Uh, and the kind of business that we could take from countries like China, the opportunity is humongous, right? It is not going to happen that countries like US is going to manufacture overnight and just simply take back the business that they were giving to the rest of the world. So they are going to consume. They are going to import, and definitely a lot of business is going to come from India. So we are very positive in terms of those aspects, in terms of the growth opportunities that could crop up with the export opportunities that are going to come up, right? So if you look at the bond yields, again, they are very comfortable. Uh, so Okay, so like if you look at the FII numbers, right? So FII numbers last 3 months have been decent. Last year, especially FIIs have done a very big selling. We saw selling starting from September, and that continued, and we saw a very good, fairly good correction in the markets. When we were sitting in September, we used to think that markets have gone expensive, and we used to cut exposures and sit on cash. Even in small cases, we allocated some of the money into liquid bonds. In the PMS, we were sitting on cash in the fresh allocations. So if you look at today, considering the valuation correction that has happened, there are opportunities, and the opportunities are looking very good at these valuations. India is so we have corrected a significant, like in many cases we have corrected 20-30%, and the opportunities are emerging as of now. We could You could not say that India is the cheapest market in the world, but yes, considering the opportunities, India will not be the cheapest markets in the world. The kind of money that is coming in, especially the liquidity that is there, that is coming in the markets, is again a very positive thing, right? When the liquidity is changing and both chasing the markets, and both domestically the liquidity is there, right? Retail is looking at markets as a long term alternative to allocating their surpluses, as well as the mutual fund inflows is intact. And despite such big volatilities and positive negative news, the money inflows have been mostly intact in the mutual funds. Likewise, the FIIs are starting to allocate, and we have seen initial trends of FIIs putting in money, and the valuations have corrected decently. So overall, considering the liquidity that is going to flow in into the markets and continue to do that, we sense that from here on the market should do fairly well, right? So we believe that this is a good opportunity to allocate, as as most of the negatives have been factored in. And the liquidity is there in the markets, and the fundamentals, especially if you look at allocating money for 1 to 3 years kind of a time horizon, the fundamentals are looking fairly solid for Indian markets and companies. So that's how we sense the market at this point in time, uh, right? Like I would also want to talk about some of the small and messy, considering that we are a broader market participant and we look at opportunities from multi-bagger standpoint. A lot of the allocations that we do, the thought process is that the stock should multiply. We're not here to buy any stock for 10%, 20% gain, or we are not playing any momentum or trade doing any trading. The idea is to allocate and to create wealth out of these stocks turning multi-baggers. In some of the cases, it happens that it takes longer, but in some of the cases the multi-bagger happens quickly also, and that's what diversification also helps us with, where if the portfolio is diversified, the some of the stocks would turn quick multi-baggers. Some of the stocks might take time to turn to be a multi-bagger. We keep on evaluating these stocks on a regular basis, but if the market conditions do not allow, the gratification gets delayed, and sometimes the multi-bagger formation takes time, right? So we keep on evaluating those stocks, and last 6 to 9 months were not that great for the markets, and we believe that now most of the things are factored in, and if there's no black swan event, if there's no event which is uncertain, like, although most of the things have been factored in, but still nothing that the market has not seen in the past. If that kind of a thing doesn't happen, the market should do fairly well from here, is what we believe, right? So, the broader markets, a lot of these companies have been doing fairly well. We have been continuously tracking our portfolio companies. A lot of these companies are focused on manufacturing, make in India, doing business for Indians, and are ready for the rest of the world. A lot of these sectors which we focus on are sectors where there are niches, there are these businesses have like delivered in the past, and they have the know-how, and many of them are PLI sectors, and and we are seeing those kind of growth in these companies, or outlook of those kind of growth in these companies, right? So a lot of our portfolio companies, if you look at the portfolios, we keep a valuation cushion. So if the market is trading, or smaller mid cap index is trading at say 23-25x multiple, our portfolios, you would see 20-30% at least kind of a cushion of valuations. Our portfolio would be priced in at least 20-30% lower than in terms of our valuation of the markets, which gives us a cushion for growth in terms of creating an alpha for our investors. And that's what we keep on doing. So as a focus, what we have done over the recent days is that we are releasing uh, a rebalance. We are releasing a rebalance as soon as tomorrow, and you would see some of the stocks uh, which we feel might not do that well. We are consolidating the portfolios, which we feel might not do that well versus the others. So what we are doing is we are churning out some stocks, and we are bringing in some new stocks. So there is some churn and some rebalance that is happening and going today, and we are fairly confident on the portfolio. Markets would not always move in one line, right? So markets would be volatile. So I think the lower end of the volatility has happened, and we should do fairly well and should recover uh, the lost ground quickly. And that's what we are seeing also. If you look at the last 3-4 days kind of market, the kind of influx of capital that is coming in, the kind of appetite that is there, the kind of liquidity that is there, we believe that we should do fairly well from here in terms of the markets, and in terms of the returns that are going to be generated from these portfolios, right? So also, there's something exciting coming in. We are sensing some good opportunity in terms of some of the next $1 trillion stocks, some of the large cap stocks, where we are sensing some very good opportunities in terms of the valuations they are sitting at and the kind of liquidity that is there in the markets. So we are launching a product. We are launching a portfolio which is uh, uh, on those lines, where these are the next $1 trillion companies, the large companies of India, doing fairly well in terms of profits and are available at cheap valuation. So we are creating a portfolio for our investors to benefit out of this opportunity that is there in the markets, right? So, what sectors do we like? We like some of the sectors, like defense is definitely the kind of opportunity that is there for growth here on also. Even if you consider the high valuations in this sector, but the kind of growth opportunities that is there, we are just seeing the tip of the iceberg. I think it is a very high and huge and long term growth that this sector is going to see. There are large players, there are small players, there are mid players, there are unlisted players. So there are a lot of players, and the kind of strength Indian defense equipments have shown, and the kind of confidence this gives to this sector is immense, and we believe that this sector should do fairly well from here. We have seen early signs in some chemical stocks. The volume growth has been there. The margin growth, although has not been significant, but volume growth has been there, and there are opportunities cropping up in terms of exports, as well as the consumption domestically. So we are keeping a close eye because this sector has not performed over the last few years, and there are early signs of recovery. As well as if you look at other sectors, so we like electronics manufacturing, and that's where we have been buying some of the stocks as well, and there we have seen some good growth. There are some opportunities in terms of auto and auto components. I think the rural recovery has happened. The demand has been there in rural recovery, which is fairly positive for the economy. The urban consumption should also do fairly well here on, and that would give a good thrust to the automobile sector as such overall, and there the valuations have gone really comfortable, so we believe that sector should do fairly well. Pharma continues to be our favorite. A lot of API companies have done fairly well in terms of the results that have come in. So fairly overall, the kind of sectors that we buy, you all know, you are all aware of them. We are fairly confident on the manufacturing theme, and we are fairly confident on these sectors to grow from here. The commentaries have been fairly positive. The macros are positive. Most of the negatives are factored in. Interest rates are falling. Dollar index is comfortable. FIIs are have started to put in money. Domestic inflows are strong. Overall, it is like we do not see any like those kind of negatives that we be scary at this point in time. We're fairly confident on the markets, and we would urge our investors to start allocating more capital at this point in time. I think the opportunity is good to allocate for the next few quarters and years to generate good returns. So that's all what I wanted to talk to you about in this session. And thank you so much. And looking forward to talking to you again in the coming session. Thank you.